Looking at today's top three things. Number one, the euro. Number two, the DAX. And number three, the 10-year bond yield. I guess the first thing on the euro is that it's trading in, number one, a relatively tight range. Number two, it's got huge correlation risks associated with what's going on in the commodity market. So in other words, when the euro bounces, you end up getting huge commodity moves to the upside as well, because that's a down dollar day. And then finally, European stocks don't like down euro either. So you really reverse most of that this morning versus last week. Last week, as you know, the euro had a very good week to the upside, up 1.9%. Yes, still a bearish trend, but it bounced to the top end of its 105 to 108 range. So again, this morning, euro sells off, European equities like it, and commodities don't go up as much. I guess that's basically the point. And again, into the Fed meeting, I'd say that you'd look for more of this. And again, we just reiterate that the Fed meeting on on April the 29th would be a dovish catalyst. So again, you got a lot of counter-trend action that you have to deal with in between now and then. The second point I'd make is on the DAX. The DAX got blasted last week on this euro up move. The DAX was down 5.5% on the week. Now, we've been looking for an entry point, so we provided you with that. We put it on to investing ideas from a timing perspective. We also did an entire conference call on Germany itself that Matt Hedrick hosted, so if you want the slides on that deck, send us an email. But again, the DAX held all levels of support. It continues to be bullish on both a trade and trend basis, and again, that is what it is. Finally, on the 10-year bond yield, again, Fed more dovish. You get lower bond yields. I mean, I don't know what else I should say about that other than what it is. You had lower bond yields last week, down 3 basis points on the week. You've had lower bond yields for the year to date, down 31 basis points for the year to date. And you have bond yields at 1.87 on the 10-year with next support 1.85 this morning. So again, staying with the long bond call, we continue to like long duration bonds, and our demographic work is the key component of the incremental work that we've done most recently, which we also introduced in our Q2 macro themes call, which you can also get from us directly. So those are your top three things.